Hello and welcome to Bunnex Investment Group. Today we are going to talk about the most powerful forex trading strategy, and if done properly, one can ultimately make a lot of money out of it. All the entry parameters will be also shown, so make sure to watch till the end. Before we jump into the whole video, be sure to check out our free signals Telegram channel. The link is right in the description below. If you are new to this channel, hit that subscribe button and smash the notification bell icon. The strategy. The strategy looks for entries after the market maker cycle is completed. In our earlier videos, we discussed that the market maker moves in threes. After three significant pushes, which might be days, separated with pullbacks or consolidation, a reversal is imminent. The major reason for this is the market makers will be actually booking their profits, and they also need to accumulate more contracts. Accumulation of contracts will give them the liquidity for their next cycle. Strategy definition. In this strategy, we will be trading the multi-session M or W. A multi-session M or W is that setup that will have its legs in two different sessions. Entry opportunities will be found at the second leg of either the M or the W. However, we will not go in on every W or M that we see on the charts. The pristine setup occurs after 3 days of rise or 3 days of drop. Mind you, days of consolidation or price pullback must not be included. The most important part of this puzzle is the second leg. From the first leg, we need to see a consolidation phase that signifies contract accumulation. After contract accumulation, there should be a burst of fast-moving candlesticks, and this usually happens during a session changeover. The main reason for this move is to hit the stops and clear the board before the market makers introduce their positions. So the burst is comprised of either 3 vector candlesticks or 3 swipes with small consolidations in between. Here is the strategy template. From the previous peak, we need to see 3 days of rise. And mind you, these may be a day of pullback or a day of consolidation. They are not to be included in the count. So this one will be the first day, the second day, and the third day of rise. After having the first leg, we need to see a consolidation before the second leg is issued. Zooming in on this part, the consolidation should be presented with this structure, and it usually occurs in the Asian session. After having this consolidation, we will need to see 3 bursts or 3 vector candles or 3 swipes with consolidation in between in this structure. 1, 2, 3, and this will be our point of entry. So on the second leg formation, we need to see 3 swipes coming out of the Asian consolidation and look for entries at the third swipe completion. This will be how our entry point, stop loss, and target will look like. So the entry parameters of this strategy, we need 3 days of rise or 3 days of drop, and these are to be seen on the H1 time frame. On micro analysis of the second leg, we will switch to the M15 time frame, and after all conditions have been satisfied, The entry is done after candle closure below or above the 13 EMA. Stop loss should be 25 pips from the entry point, and the take profit should be 50 pips from the entry point as well. Here is the example of CHF against the Japanese yen. The first step is to see 3 days of rise, and these are the days marked in between the dotted lines. So this was actually the first day of rise, the pullback, the second day of rise, another pullback, then the last day of rise where we had our anticipated first leg. So what are we expecting? We are expecting price to come back to this point and have our entry point within this region. Right? This is euro against yen. Example number 2. We had the first day of rise, which is actually the level 1, a pullback. The second level of rise, level 2. Then the last day of rise, which is actually the level 3. Then we had our anticipated first leg. Then waiting for our second leg. Here was our second leg. And closure below the 13 EMA was our point of entry, and our 50 pips was definitely going to be hit. This is odd against the US dollar. Example number 3. We had our first day of drop, then second day of drop, which is our level 2, and our last day of drop, which is our level 3. This was our anticipated first leg in consolidation. Out of consolidation, this is actually an H1 time frame chart, but on M15 you can actually see 3 bursts of price is what we were discussing, and candle closure above the 13 EMA on the M15 time frame, not on the H1, on the M15 time frame. That is where we were going to enter, and our point of entry was definitely going to be somewhere within this region, and our 50 pips was definitely going to be hit. Then this is USD against the Canadian dollar. We had our first level, our second level, third level, giving us our anticipated first leg. Then our second leg was issued, and candle closure above 13 EMA was going to give us our entry, and 50 pips was definitely going to be hit. So, as I always say, that on each and every strategy that you can get under the sun, without discipline, you will never be consistent. And without consistency, you will never achieve the goal. So do a lot of meditation and stick to the only trades that we have discussed. Do not give yourself pressure. I keep on repeating this on each and every video because I know that failure of many traders is being caused by pressure they attain on social media, on different trading forums. Do not give yourself pressure. In conclusion, follow your plan without deviation, distraction, thoughts, or hesitation to act. I'm sure you should be able to recite this statement because I've said it again and again. And on that note, thank you for watching. Like and subscribe, and check out our free Signals Telegram channel. This is the link right below in red. And don't forget to share with someone this video. It might definitely help someone. Thank you.